Welcome to this video. We are going to address the 2021, the June major series. We will talk about both paper 1 and paper 2. There are some multiple choice questions highlighted in the examiner report, and I would like to discuss. The first one is question 5. The credit balance on your SME account in the purchase ledger. So what is purchase ledger? It records the transactions between the owner and the supplier. Owner and the supplier. So think about, for the supplier, that means a kind of liabilities. So it must be the owner. It must be the owner owned the money. Owned the money. So the answer goes to B. The answer goes to B. It's not about payment. It's not about payment. Be very careful. Balance is about owned. This is called. That's why we have the balance carried down. The balance carried down, that means you owned people something. It's a kind of liabilities. The other two questions mentioned in the exam report they are question 7 and question 8. It's about the process or the flow of the original entry. So it shows that the examination trend is that they keep asking these. So the topic 1, original entry, you have to figure it out very carefully. So how would accounting data be processed? Let's take a look. For example, sold good. How to record sold good? Think about it. You may think about it. How to record it? So what is the first step to do it? So this is what the question regarded. When I try to deal with this question, I close out all the ledgers. Because the ledger is for the accountant. So no. So it must be the journals. We'll start with the journal. The journal. For sales, we'll start with the sales journal. So this is step C. C is the answer. So for multiple choice question 8, the 3-column cash book. Correct. This one. Lots of students ask whether option 2 are correct. Now think about it. It contains ledger's account. No, it must be wrong. For ledger's account, it's processed. It's processed. For the cash book, it's just for recording. So number one and number 3, they're correct. It's for recording. Ledger is for processing. This kind of differences is we addressed in both question 7 and question 8. Candidates, you must study these topics very carefully. So right now we are going to move on to the paper 2, the structural questions. We will go through all the questions. Right now we are moving to the paper 2, structured question. Now I've put the question here and the marking guidelines. Question 1A is question related to petty cash. So first of all, we will start with, of course, is the balance broke down. So you put the $48 in the left hand side. Next, what do we need to do? We have to check. The impressed amount is 200. So 200 minus 48. So 200. So let's check it out. 200 minus 48. So that is 152. So we will put it as a bank, to restore the balance to 200. And then we will start with, these items. So let's check it out. So first of all, this one, number 5, date 5, office cleaning, of course, it's a kind of office expenses, right? And then train ticket, yes, travel expenses. And let's take a look. And then Hunter. Hunter is a supplier, right? So supplier is a general ledger. Taxi fare, of course, is travel. And the last one, receive cash. Receive cash, a trade receivable. So for the receive cash, you have to, be very careful. For the receiving cash, because the marking guideline has shown a wrong example. This $11 should not be put in here. It should be put in here. The $11 to match the date. right? Okay, if $11 is put in here, okay, it will match with the taxi fare. It's wrong. So remember that, okay, the marking guide must not always be correct. Be careful, okay? The $11 you put it here, okay? You put it here. Okay, let me give an error. So y, okay, here, okay, here. Okay, so this is how we do it. Okay, and then next, okay, it's not the end. It's not the end, because you have to figure it out. Okay, so what? So after 200 minus, okay, minus 120, 200, okay, minus all the total pay amount 120, and then add up, okay, and add up the $11. Maybe I would give you a formula, okay. So let me mark it down. The 200 opening balance, okay, minus 120 expenses plus the $11 we've just mentioned. So you will equal to 91, okay, the 91. So this is okay. So that is okay. The balance brought down would be 91, okay. So this is for part A. For part B, okay, it's about the ledger account. Travel expenses, of course, general ledger. The payment to the hunter, that is a supplier, of course, purchase ledger. Straightforward. This one is duality. Okay, a lot of students miss this one. Okay, because it's not only appeared. This concept only appeared in the CIE syllabus. Okay, if you study LCCNI or Pearson syllabus, you don't have this concept called duality. Okay, so it will be applied, okay, when figures from the petty cash book are posted to the appropriate ledgers. Okay, so this one you have to bear in mind. Okay, if you study other accounting courses, okay, you don't have this. Okay, now for part C, so what are the process of issuing this statement? Okay, so the process will be like this. First of all, you have to remind the people to pay the balance, then allow him to check the record and give a summary. So this one again, it's quite, I would say, is only appeared in the IGCSE syllabus. For other syllabus, okay, it won't. There are no question type like this. For part D, it talks about whether Leo should go ahead with the $50 charge by the credit transfer. Okay, so there are a few things that you might need to consider. Okay, first of all, you do not have to face-to-face meet them to save the time, and there are less risk of fall. Okay, so these are the advantages. But think about it, the $50 is real. Think about it, there might be extra charges, right? So you have to think about it. Question 2, is all about trade receivables, and rent payable. Okay, these adjustment. For part A, we have to prepare the rent payable account. So let's check it out. So I would like to check out, the opening balance. Okay, the opening balance. As you can see, there is rent prepaid. So this one would be the opening balance. The opening balance. So I will put it here. And also, what happened during the year? Say for example, you can see these are related to rent, right? Say for example, there are rent charged 3900 and the check payment. Okay, so 1950 and 2100. So I will put this check payment here, and remember that it's referred to the bank, And for this 3900, the rent charge that we will call the income statement. Okay. So for the name, okay, you must be clear, okay, clear about the name. After that, you may grab the balancing figure, the balance carry down, okay. So you do it on your own, and remember you have to do the brought down, okay. So this is for part A. Now for part B, you have to compile the provision for doubtful debts. Now this one is quite tricky. I mean, it's quite tricky. So you have to compile the opening balance on your own. Okay, 4%. So what you need to do, you have to take 6250 times 4% to grab the opening balance. And one more thing you have to do, you have to grab the closing balance, 6% for the closing balance. So we'll have 7,000 times 6% to grab the closing balance. This is quite tricky, very tricky. And so what do you have? So right now you have 420 for the closing balance, 250 as the opening balance. So this one, the income statement, this is the last step to do. Now, indeed, for this income statement, let me highlight it. Okay, for this income statement is the balancing figure. Balancing figure. So this is the the last item you grab. Okay, so be very careful about the steps. Okay, step 1, balance down, balance for down. Step 2, balance carry down, and then you grab the income statement. Okay, so part C. Okay, so we have to talk about the accounting principle. Okay, so you might this is quite easy. Okay, you can talk about matching or accrual. So part D. So how the realization principle applied. So this is a kind of textbook. Okay, I would say it's a kind of textbook question. Okay, so how to apply realization principle. Okay, so what you need to do, of course, you have to put down the definition. Okay, so profit is not earned when sales, when the payment is received. Okay, so these are the definitions from the textbook. Okay, one more thing. No profit is recognized. Okay, when the goods is ordered. Okay, remember that the revenue is regarded as earned when the goods are delivered. When the goods are delivered. Okay, this is very important. For part D2, okay, so we have to explain how the prudence concept be applied in the provision for doubtful debts. Again, so these are textbook questions. Okay, say for example, profit should not be overstated, and they should be shown in a realistic amount. Okay, to facilitate the decision making. Okay, decision making of different stakeholders. So this is all. Okay, for this part, and then we'll jump to the last part of this question. Okay, for part E, it talks about whether to charge those people who keep late payments. Late payment. First of all, you have to consider the effect to the customers. So whether you may encourage them to pay as early as possible, or they might just leave. So this is the first thing you have to consider. Okay, the effect to the customers. The second thing, you have to think about the cost. Whether it would reduce the administrative cost, or indeed when those customers leave, you have to pay extra cost to recruit the new one. The third one is about what do you prefer. You prefer a healthier cash flow, or you prefer sales. If you charge them interest, of course the cash flow will be improved, but you might lose some customers, then the sales will drop. So which one do the company prefer? So this is the last question you have to consider. Question 3 is a limited company, and we have to prepare the income statement for part A. So let's take a look how we do it. First, of course, we will start with revenue note. And for the cost of sales, there are several components in this cost of sales, including opening inventory, and then purchases. Purchases. And the closing inventory. So then you will have the cost of sales and the gross profit. Quite straightforward. And for the expenses, there are some adjustments you need to be reminded. First of all, let's take a look at the rent and insurance. Now for the rent and insurance, so in number 3, it talks about there is a kind of prepayment. There's a kind of prepayment that you will need to make adjustment. So the prepayment is for 3 months, 1 March and to May and the end of May. As you can see, the income statement is prepared for the end of March, so you have to count. March, it should be included. For April, so this is a kind of prepayment. For May, it's a kind of prepayment. So we have to deduct 2/3. 2/3 is a kind of prepayment, so you have to deduct it. So this is the adjustment you have to make. Next, let's take a look at the wages. Now for the wages, so you have to take a look at number 4. So number 4, there are accrued wages, so you have to add it up. So you try to add up the accrued wages. Next, for the operating expenses, there are no adjustments, so you will just copy. And for the depreciation, let's take a look how to do it. In the question, it stated clearly that the depreciation would be charged 20% per annum, using the reducing balance. So what you need to do, so first of all, you have to grab the cost. the cost is 200,000 minus 7200. So what you have here is the net book value. Okay, so you make use of the net book value and then times the rate, which is 20%, and then you can grab the answer. Okay, now and the next, after you grab all these expenses, then you have the profit from operations. So this is very important. Can you mark it down? Okay, especially for part C. Okay, for part C. Okay, now and then don't stop here. Don't stop here, because there is one thing. Be reminded. No debenture interest has been paid. So what is the debenture interest you have to check? Okay, so it should be 30,000 times 4%. 30,000. Okay, so let me give you the formula. 30,000 plus 4%. Okay, which is 1200. Then you can grab the 9990. This is for part B. Okay, so let's take a look at part B. Part B, we have to prepare these changes in equity. So first of all, on April 2020, there are a few things to do it. Of course, for equity, we will have ordinary share capital, returns, earnings. So these are regarded as of course the capital, right? So you try to add these up, and then you will have 91500. So this is the opening balance. Now, so what do we have? First of all, we will have the profit for the year. Okay, you grab it from part A. And then what's next? Okay, we will have the dividend paid. Dividend paid here. And of course, one more thing we have mentioned is the general reserve transfer. Okay, so this is how we do it for the statement of changes in equity. So this one is quite tricky. Okay, as it does the general reserve. Okay, there's no opening balance. So you have to be careful, so there's new general reserve. Now for part C, I think this is the most difficult part in this question paper. This one, 11900, a lot of students, they make use of 9900. This one must be wrong. Candidate must be aware that you have to make use of the profit from operation. Okay, so you have to check it out from part A. Okay, so you do not make use of the profit for the year. Okay, because it's after the debenture interest. This is very, very important. And in the exam report, it talks about that a lot of candidates. Okay, a lot. Okay, you make use of 9900. Okay, so that must be wrong. You have to make use of 11190. Okay, as the return. And next, so let's take a look to the other items. Okay, this one 95890. You grab it here from part B, and another one. Okay, 30,000. Of course, so this would be the debenture. Okay, be the debenture. So this is all for this part C. Okay, the most difficult part. Okay, in the whole set of paper. For this question, part D. Okay, and that is a kind of question. Usually appears in the textbook. That is, candidates need to differentiate ordinary and preference shares. So there are a few things you might refer to. First of all, is the rate of dividend. Number one, the rate of dividend. So the one is fixed, another one is varied. Number two, the risk. The risk. Okay, you might figure it out. The risk. So these two are very common. Okay, these two are very common answers. So there are other answers, of course, you may talk about. So number three. Okay, number three will be about the voting rights. Okay, the voting rights. So you may mark it down. Number three, about the voting rights. Okay, simply a straightforward textbook question. Question 4 is about the non-profit organization. Now for part A, we have to do the subscriptions account. Now first of all, what we need to do, you have to take a look the balances. Okay, the balances, including those balance at the beginning. So this is what we call. Okay, I will use a black one. Let me pick a black card. So this is what we call balance down, and this is carry down. So you have to enter it very carefully. So this one, for subscription in advance is a kind of liabilities. Subscription in arrears is regarded as assets. So you have to render it. Be very careful. Okay, for this one 5215 for asset. Debit balance 1200. Okay, this one credit balance for liabilities. And again for 1050 liabilities, right? 5830 liabilities. Sorry, asset. So you put it into the debit side. So next, so this one, some students might make error. Okay, this 5830 we'll put it here. This 1050 we'll put it here. Okay, as for the carry down. Right now, we are going to take a look the things there. So what do we have? So we have the balances. Next, we have the subscription received. So if you have the subscription received, that is what we called the bank. The bank. So remember that it's bank. We will put it as a bank, but not you don't put down subscription received. You put down bank. So last one, after we grab all these, so and then what do we have? So we will have this one as a kind of balancing figure. So this is the last one. This is the last item that we have. So after we have all the balance brought down, carried down, and the bank, then we will have the income and expenditure as the balancing figure. So this is how we do for part A. Now for part B, we have to prepare the total shop payable account. So as usual, we have to find out the opening balance. So let's check it out. The total shop payable. So this one 4275. As you can see, this is the balance brought down. So for liabilities, we'll put it here. And for 5990 for liabilities, we'll put it here. And then as for carry down, we'll put it in the debit side. So first of all, we figure it out all these for the balance brought down and carry down. So next, what do we have? We have the purchases, 34200. So we'll put it here. 34200 we'll put here. And then the interest charged. Interest charged, we'll put it here. Charge, that means charge, right? Charge. So this is of course it's a kind of revenue. So we will put it in the credit side. And then next, what do we have? We have 1710 purchases return. So we have to deduct it. So we'll put it here. So before, before we get the answer, so I would like to remind you that. So right now we have balance brought down, purchases, interest. We added up, deduct the balance carried down, deduct the purchase returns. Then we will have this one, the bank. So this is the bank. Again, it's a kind of we call it balancing figure. So that is this is the last item we have. This is the last item we have. So that's all for part B. So right now we are going to move on to part C. Part C, we have to calculate the revenue, from the shop sales, from the shop sales. So let's take a look. So what do we have in the question? This is a very important information, that is markup. The markup is 20. The markup is 20%. So right now we have to figure it out. So what is the amount of the cost of sales? So let's take a look. Here, there is 34200. 34200 minus 1710, and then we will have the net purchases. We'll have the net purchases. Then we can make use of this formula to compute the answer. We can make use of the formula to compute the answer. So this is all for part C. In this question, it talks about whether renting a part of the premises is a good way to do it. There are a few ways to do this question. Now, first of all, you have to consider the changes in the number of members. The changes in the number of members. So that's number one, members. So after you rent it out, would you recruit new members, or the existing member would drop out? Number two, so you have to consider whether the revenue, the income will be increased, or you know, expenses will be increased. So that's number 2. You have to figure it out, the income and expenses. Okay, so what are their relationship? Okay, would it increase the income or the expenses? Okay, so this is what you need to think it about. If you want to talk about the other alternatives, one thing you may consider is about the profit. Okay, so how to increase the profit? Say, for example, you may think about the markup. Okay, think about raising the markup. So this is number 3. So how would you deal with the profit? Okay, so these criteria are useful for you to answer part D. Here we go to the last question in this exam series. In this question, in part A, candidates, they have to do the corrections. They have to do the corrections. So there is an example given, in the question paper. So this is an example. As you can see, there are no mark reward for this example. And then there are total 1, 2, 3, 4. 4 errors. So what candidate need to do? They need to try to do the entries required to correct the error. As you can see, there are marks rewarded. Let's take a look at the first error. The first error, the $31, paid, but it record as an office expenses. So first of all, we need to cancel these expenses. So how to do that? We have to credit the expenses. The second thing, we have to record this payment. So that is debit the supplier. So this is how we do it for the first error. The second error would be more complicated. For the second one, it's about the sales return had been correctly recorded in the customer's account. However, it has been credited to the purchase return. Again, what we need to do, we need to cancel this credit, because it's wrong, right? So we have to cancel it by doing the debit. So by doing the debit, the purchase returns, then this error will be cancelled. The second thing we need to do, we need to record it correctly in the sales return account. As you can see, only the customer's account had been entered, but not the sales return account. So the second thing we need to do, we need to record it, by debit it. The last thing we need to do, we have to open and suspend account, to record this kind of error. Let's jump to error 3. So error 3, a payment $72 has been recorded as 172 in one side account. One side error. So for this one side error, you have to pay attention. It's not about the cash book, but the suspenses account. You have to pay attention, carefully. For this one, it's called one side error. And next, we have to, as the, this one has been overstated. So we have to deduct it. We have to deduct it, by doing the credit. Last one, the purchase invoice has been debited to the supplier and credited to the purchasers. So this is, complete reversal. This error we call it complete reversal. So what we need to do, we need to do the reverse back, but the amount is not 102. The amount would be 102 times 2, which is equal to 204. So this is how we, do the correct entries for complete reversal. So right now we will move on to part B. So we have to prepare the suspense account. The skills will be like this. Number 1. Let me mark it down. The skill number 1. So we have to refer back to part A. Refer back to part A to see. So what are recorded? In the suspense account. So let's take a look at these errors, including the example including the example, this one. Okay, so there is a suspend account 200. So you have to mark it down like this. And then there is a suspend account, okay, 210. So we'll put it here. So 105 times 105, that is 210. And also, there is an suspend account here, 100. So we have to put it here. So this is the first way to do it. So we have to refer back to part A. And the second steps, okay, the second steps. So we have to find out the opening balances. Okay, so we have to find the opening balances. So that is, so we try to add up 200 plus 105 plus 105 equal to 410. 410 minus 100. 410 minus 100. So this would be the opening balance. So in this one, okay, I will call it, balancing figure. Balancing figures, okay? So that is, okay, we have to figure it out in the last steps, okay? So remember that the opening balance is not given in the question, but, okay, you have to find it out on your own. So right now we will move on to part C. Part C, what we need to do, let's take a look at the question, okay? Here. So the account owned 327 before the errors occurred. So we have to compute the amount, okay? So the skills will be the same. So first of all, we highlight this supplier. So what happened? What happened? Okay, so include, okay, this one, deduct 31, right? And also this one, okay, this one, increase 204. So this is how we try to find out the answer, okay? So I would like to recall one thing, okay? For supplier balance, remember that, okay, for this is a supplier. So if you face a debit, so it is deduction, okay? It's a kind of deduction, like this one. The first error. And for credit, it will be addition, like the error, okay, in the last item, okay? So credit 204, that means add up 204, okay? So this is how we do this type of question. Okay, last question, okay, last part of this question. 3 reasons, okay, why, okay, the calculator is not recorded as a non-current asset. You must apply the accounting concept that you've learned, okay. So this term is materiality. So this is the accounting concept. Okay, remember that. Okay, we have to apply the accounting concept. Materiality. So we have to define. Okay, because it's a kind of immaterial amount, and that's why, okay, we do not record this thing as non-current asset. And also there's no depreciation. Okay, no depreciation. Okay, or okay, the second way to do it, you try to define the meaning of non-current asset. Okay, non-current asset, that means, okay, you use it over for 12 months. Okay, but it might not be applied to the case of the calculator. So this is all, okay, all the questions, okay, all the answers for the 2021 June IGCSE accounting syllabus.